Recently, some famous billionaires have started selling various stocks, cashing in on billions of dollars in profit. This begs the question, have we hit the market top, or do we still have room to run? Today, we'll take a closer look at the investments made by the mega rich to find out if this profit-taking is just dumb luck, or if they know something that the rest of us don't. One of these billionaires is Jeff Bezos. At the time of filming, Bezos is the second richest man on the planet, behind Elon Musk, according to Bloomberg. As the founder of Amazon, as well as the owner of the space exploration company Blue Origin and the Washington Post, Bezos has a net worth of around $199 billion. And Bezos has been in the spotlight recently after it was revealed in February this year he sold 50 million Amazon shares worth around $8.5 billion. This selling was filed with the SEC back in November 2023 through something called a 10b5-1 plan. For reference, a 10b5-1 plan is a structure that prevents insiders from taking unfair advantage of information that the general public doesn't yet have access to by making them declare trades months in advance. Anywho, Bezos had declared that he planned to have sold 50 million Amazon shares by the 31st of January 2025. He certainly didn't need that long though, because he's already sold up. And in fact, all 50 million shares were sold very quickly. Selling started on the 7th of February, and by the 20th of February, all 50 million shares were gone. That's just 2 weeks. While $8.5 billion might sound like a crazy amount of money to be shifting around, for Bezos, this is just a drop in the ocean. He still owns 10% of Amazon, which has a market cap of over $1.8 trillion. Logically then, a bit of quick maths tells you that he still owns $180 billion worth of Amazon stock, with the recent sale accounting for around 4.7% of his overall allocation. So just a little bit of pocket change then, right? And by the way, if you're enjoying the video so far, show it by hitting the like button and give the video a boost. And subscribe if you haven't already. We interrupt this programme for an emergency crypto weather forecast. Get ready for a whirlwind of savings. We're seeing a high-pressure sign-up bonus system forming in the northeast, with some exchanges offering up to $50,000. Lush. In the south, we'll be seeing some heavy discounts on hardware wallets, so watch out for those if you're going to be out and about. And then, over in central areas, there's a high chance of trader fee discounts, which should be setting in later on, up to 60% off there. Amazing. For a more comprehensive forecast, visit the Coin Bureau deals page using the link in the description. These deals are red hot, so make sure to take all necessary precautions. That's all for the forecast. Now back to our scheduled programme. It's not just Jeff Bezos that's been selling recently either. Another high-profile billionaire is Meta platform CEO Mark Zuckerberg, who was spotted selling almost $500 million worth of Meta stock in the last few months of 2023. In case you weren't already aware, Zuck has a net worth of around $176 billion, making him the fourth richest person on Earth, according to the Bloomberg Billionaire Index. The vast majority of his wealth comes from, naturally, Meta. As the company's controlling shareholder, Zuck owns around 350 million shares, worth around $170 billion at today's prices. As a fun fact, on the 2nd of February this year, Meta announced its first ever dividends payout, which will see Zuck making $700 million in passive income each year. It's all right for some. Like Bezos, Zuck filed for his sales via the SEC's 10b5-1 plan, which was submitted on the 31st of July 2023, with the aim of selling $428 million worth of shares by the 1st of February 2024. Sales started on the 1st of November last year, with Zuck selling these shares bit by bit every day, until wrapping up on the 29th of December. I bet his New Year's Eve bash was a pretty good one. But perhaps the most shocking of all of the recent billionaires offloading their portfolios is Jamie Dimon, CEO for the past 13 years of megabank JP Morgan. As the bank's longest-serving CEO, he has a net worth of $2.1 billion. He sits much further down the rich list than Bezos and Zuck, being merely the 1,498th richest person in the world. But hey, still a billionaire, so does it even really matter? Dimon and his family own around 8.6 million shares of JPM and aim to sell 1 million of these shares valued at around $150 million. Now, $150 million is merely a fraction when compared to the sales made by Bezos and Zuck, so you'd be forgiven for not paying as much attention to Dimon's little windfall. That is, until you learn that this is the first time ever that he sold any of his JP Morgan shares. Probably nothing. So that covers the recent selling from the rich then, but what about the powerful? As you'll have no doubt guessed, the powerful in question here are the politicians, who've been able to make trade after trade to massively outperform the rest of the market. As the stock market continues to rise, retail traders have seen their portfolios grow at an impressive rate. For reference, the S&P 500 has grown by as much as 27% over the last 12 months. If you'd held on during that time, you're probably feeling pretty pleased with yourself, and rightfully so. However, this pales in comparison to the aforementioned elite, who seem to have been able to time the markets very well indeed. Maybe a little too well. You see, once you start to take a closer look at who made certain trades at particular times, you begin to question if they had access to information that other market participants didn't. Spoiler alert, but in almost every case, they almost certainly did. Note that we actually did a video in October that covers all of the shady goings on in congressional trading. The link is down below if you want to learn more about that. Anywho, this is something that was brought to light on the 2nd of January this year in a report posted by Unusual Whales, an anonymous team who raise awareness of topics such as congressional insider trading and corporate lobbying in America. As you can hopefully see, the SPY index, which is an ETF that tracks the performance of the S&P 500, increased by 24.8%. You'll also see that 32 politicians are noted to have outperformed the SPY, with 4 standouts seeing over 100% returns. Brian Higgins is way ahead of the rest with gains of 238.9%. Although, to be fair, this is accredited to long-term holdings of Nvidia stock, which he first acquired way back in 2017. The following 3 politicians are Mark Green with gains of 122.2%, Garrett Graves with gains of 107.6%, and David Rouser with gains of 105.6%. The rest of the list shows a mixed bag of politicians from both sides of the aisle, all seeing outsized gains when compared to the SPY. The chances of this being a mere coincidence are slim, to say the least, especially when you see reports from various outlets that seemingly prove that there was more going on behind closed doors. In other words, insider trading. Arguably, one of the most notorious of politicians in Congress to face insider trading accusations is Nancy Pelosi, the representative for San Francisco, who also served as the 52nd Speaker of the United States House of Representatives. For context, Pelosi has a net worth of around $165 million, all on a relatively modest salary of $2.2 million per year. However, she also manages to make around $1 million a month through other financial means. Now, Nancy Pelosi has been subject to allegations that she partakes in insider trading. If these allegations are true, then Pelosi serves as an example of just how corrupt politicians can become if given enough freedom to maneuver behind closed doors. This is something that Unusual Whales reported on in detail, and I'll leave a link in the description to the thread they posted on X if you want to read it in full. For now though, here is a TLDR. Recently, Pelosi made a boatload of money from an Nvidia call options that she and her husband purchased on the 22nd of November 2023 in a leverage bet that Nvidia share prices would go up. It's worth mentioning that in one calendar month prior to this, Nvidia prices had already rallied by 22% before they made the purchase. Sure enough though, Nvidia calls went up by 85%, netting the Pelosi's $1.8 million in just 93 days, more than 8x what her salary paid in that time. And as Unusual Whales highlighted, this trade was done while Congress was still in session, 20 minutes before the close of the market. What's interesting here is that Pelosi was already trading millions of dollars in Nvidia in the summer of 2022, before voting on a semiconductor bill put forward by the Biden administration. 1 month later, Pelosi then proposed her own bill, along with Representative Lofgren, that introduced a congressional trading ban. However, this bill was weak, flawed, and full of loopholes, and it's possible that this was by design. Pelosi then stepped away from trading completely. That is until her leverage bet with Nvidia in late 2023. It seems though that was too big of an opportunity to turn down. There's actually a clip you can find from Yahoo Finance's YouTube channel where Pelosi was asked if her husband has ever made a trade based on insider information.
Has your husband ever made a stock purchase or sale based on information he received from you?
No, absolutely not.
Naturally, she denied it, but we'll let you be the judge of just how convincing her response really was. To be clear, insider trading is illegal. It seems the reason politicians can get away with it is simply because they're the ones in charge. Case in point, just last month, a man from Texas was caught out by the SEC for making a $1.8 million profit after listening in on his wife's work calls and making investment decisions based on what he heard. Anywho, regardless of whatever may or may not be the truth behind their success, the fact of the matter still remains. Politicians continue to make perfectly timed stock purchases that see them make substantially larger returns compared to the general public. Of course, these gains cannot be realized until those stocks are actually sold. And to make sure those gains see their maximum potential, the selling has to be just as well timed as the buying. So, this begs one question then. Why now? Despite all of the recent selling falling within a relatively short time frame, each billionaire seems to have a different reason for offloading masses of stock. For Jeff Bezos, the sale of Amazon stock was allegedly due to him moving back to Miami, Florida, where his parents reside, something that he announced 6 days before filing his 10b5-1 plan. Notably, it's estimated that this move also allows Bezos to avoid paying around $430 million in capital gains tax. But we're sure this is just a happy coincidence. Interestingly though, other billionaires, including Carl Icahn and Josh Harris, appear to have moved to Miami for the same tax reasons. And in fact, it's not just the billionaires. Analysis from 2019 to 2020 shows that households earning more than $200,000 annually have moved to Florida at 4 times the rate of any other state. Meanwhile, Mark Zuckerberg seems to have sold after Meta stock rallied by over 170% throughout 2023, showing that investors have moved on since that metaverse debacle. Although there could be a much more sinister reason for him selling. More on that later. This rally was very much needed because when Zuck announced that he was rebranding Facebook to Meta and switching the company's focus to VR metaverse, the price of Meta shares plummeted. For reference, Meta's all-time high around that point was in September 2021, and just 1 year later, the price had fallen by over 50%. And just to keep you on your toes, there's also the possibility that Elon Musk could soon start offloading Tesla stock. To be fair to Musk, he did promise in December 2022 that he wouldn't be selling Tesla stocks for another 18 months, which would take us to June of this year. This announcement saw Tesla's share price surge by more than 50% in the 3 months that followed. However, there's nothing officially in place to stop him from changing his mind and offloading sooner. But it's perhaps Jamie Dimon's first ever sale of JP Morgan stocks that has the most eyebrows raised. Recall that this is a man who has been in charge of the megabank for over 13 years. Until now, Dimon seems to have been taking the Rick Astley approach. What makes this even more intriguing is that it seems like for no real reason was given for these sales, at least not publicly anyway. Whilst it's entirely possible that this is simply a little bit of profit taking, Jamie Dimon's diamond hands finally easing up could be taken as a sign that something big is imminent. In case you didn't already know, the banking sector in the US has been a little shaky recently, and you would expect that the CEO of one of the world's leading banks has a better insight into upcoming events than most. This highlights a question we asked earlier. Why now? Is there something on the horizon? And more importantly, does it signal that the markets are in for some hurt? To understand just how significant this all could be, let's first take a look back at the last time major selling like this took place. Billionaires have notoriously sold in previous market cycles just as their company share prices were peaking. One example would be none other than Jeff Bezos, who sold Amazon stock in November 2021. The sales came at a time when Bezos was at the Glasgow COP26 climate summit, where he proposed $2 billion from his Earth Fund to restore nature and the transform food systems. Incidentally, these November sales were also worth around $2 billion, with around $8.8 billion in sales throughout the whole year. Notably, he had also offloaded around $10 billion the year before. Shortly after the 2021 sales were finalized, the price of Amazon shares tanked. In regards to the sales made this year, the plans for the money aren't clear, but experts believe the timing makes sense. This is because Amazon share price is up around 12% since the start of the year. Another billionaire who sold in November 2021 was the one and only Mark Zuckerberg, who divested more than $1 billion of Meta stock. Although trading at a peak, Meta share price was actually one of the lowest points since 2015. Interestingly, the current trading volume in Meta is similar to that of November 2022, and with the price rallying by 194% throughout 2023, it seems only reasonable that Zuck took some of this off the table. Unlike Bezos, however, Zuck won't be avoiding those taxes. He could be on the hook for approximately 24% in capital gains tax, as well as 13.3% state tax in California, where he also keeps a $37 million estate. And we would be remiss to not mention Elon Musk selling of Tesla stock throughout 2022. With sales starting at the tail end of 2021, Musk dumped around $4 billion in Tesla shares throughout 2022 to help fund his acquisition of Twitter, now X. In characteristic fashion, Musk chose to sell 10% of his Tesla stock after putting the decision to a poll for his 62.5 million Twitter followers. The day before the poll went live, his brother Kimball, a Tesla board member, also sold 88,500 shares at a value of $109 million. As mentioned earlier, Musk declared in December that year that he won't be touching any more Tesla stock for 18 months. However, this all could depend on how X performs financially. Investors have been keeping a very close eye on X's performance recently, after several advertisers paused their spending on the platforms. What's concerning is that Musk revealed that a single week without advertising could have completely killed the company. This shows that X is running a very fragile operation. This was evidenced when Musk laid off a whopping 80% of Twitter staff in 2022, after noticing that the company was actually losing around $4 million a day. If X is still struggling, then there is a chance that he could dump even more Tesla stock before June to keep it afloat. Now, given the fact that all of the elite's recent portfolio offloading is happening within a really similar time frame, the reasons given by each individual should perhaps be taken with a massive pinch of salt. This is especially true when you consider just how much the overall stock market has already pumped. As mentioned earlier, the last time we saw this level of sellings, the market crashed shortly afterwards. The timing of billionaire trades is definitely something to keep an eye on. After all, their ability to time the market is part of the reason they're billionaires in the first place. When you consider that Jamie Dimon is selling stocks in his own mega bank for the first time ever, you start to wonder what it was that led to that decision. Could it be that he's concerned about the banking situation in the US? Does he see another collapse of some sort on the horizon? Maybe a banking crisis is the least of our concerns. Maybe there's an apocalyptic level threat around the corner. Sounds a little extreme? Well, maybe. Until you learn that Mark Zuckerberg is building a $270 million underground bunker in Hawaii, complete with blast-proof doors. That's right, the king of social media is currently doing his best to fortify himself away from society. And this sounds very much like it's partly for one. Anyone working on the 5,000 square foot bunker has been sworn to secrecy with NDAs. Although, given that Zuck has been buying up the land in Hawaii, it doesn't take a rocket scientist to figure out who owns it. As it happens, he's not the only billionaire to have plans of retreating to his own doomsday lair. OpenAI CEO Sam Altman and PayPal co-founder Peter Thiel have an arrangement that if the world were to come to an end, they share a protected bunker in New Zealand. Though, ironically, planning permission was denied due to environmental concerns. And if it's not an apocalyptic threat on the horizon, then it could be an imminent large-scale cyber attack. This is because Nancy Pelosi was again caught out potentially making investment decisions based on insider information. On the 12th of February, Congress was briefed on a serious national security threat. Coincidentally, or maybe not, Pelosi just happened to scoop up $1 million worth of shares at Palo Alto Networks, a cybersecurity company, in the same week. Oh, Nancy. But taking off our tinfoil hats for just a moment, it looks more likely that the main reason why we're seeing this selling is because of how heated up the markets are getting. This can perhaps be best seen on the Nasdaq's S&P 500, which is currently trading at its all-time highs. While it's great to be in the green, it's also only a matter of time before we see a correction that will see some investors get burned. When you consider that millions of dollars worth of shares is just a small percentage of a billionaire's overall allocation, it looks a lot more like some simple profit taking. Whether we see more selling in the future, that remains to be seen, but it does seem very likely. So what should you do? Well, far be it for us to ever offer financial advice, but it would appear that we're getting some strong signals that the markets could cool off and retrace at any moment. What happens next is anyone's guess, but if you think there's a reason this selling by the elite has been taking place, then it could be wise to consider taking a little bit of profit off the table. It's also worth noting that there are a few other individuals who have raised their concerns about the market. Economist David Rosenberg has said that the recession has been delayed, but not derailed. Come to think of it, maybe this is something that Jamie Dimon has come to realize. And then there's Mr. Warren Buffett, investment guru and co-founder and CEO of Berkshire Hathaway. With a net worth of $134.7 billion, he sits comfortably as the sixth richest person in the world. Anywho, Warren was quick to shut down anyone hoping to make bank when he basically told the world that he believed investment opportunities had hit a brick wall. He said, outside the US, there are essentially no candidates that have meaningful options for capital deployment at Berkshire. He then followed this with a pretty damning, all in all, we have no possibility of eye-popping performance. Now, obviously, this could be seen as a heavy signal that the market is approaching its peak. However, as Warren Buffett also once famously said, never bet against America. He might be right, given that the stock market's continued growth is bringing the S&P to new all-time highs. As the old saying goes though, what goes up must come down. While its price action seems to be running on rocket fuel lately, eventually that rocket will run out of steam and come back down to earth. So, if you're looking at when's the best time to take some profits, maybe following the footsteps of some of the world's most successful investors could be the best place for you.